Well, let's double click on that. I mean, you've seen multiple major carriers exit the market, K&K, Harco, and others. I mean, is it because of what dealers are wanting to do with test rides or events or UTVs and ATVs? I mean, who's left and what kind of options do dealers have now?
You've really got to look at the insurance process, not just as it's not a commodity business. It's not a commodity business at this scale when you're dealing with such a high touch business. What you're really buying here is a risk management strategy, and your broker should be part of that risk management strategy.
Everybody to the Dealership Fixit Podcast. Today's guest is Zach Materne. He's the commercial risk consultant with Apier Commercial Risk Management and a former powersports dealer himself. Zach helped develop and build one of the top European motorcycle dealerships in New Orleans before transitioning into insurance and risk management. And now he's using that experience to help dealers nationwide protect their businesses, navigate shrinking insurance markets, and prepare for the unexpected. So welcome, Zach.
Thank you so much, Jacob. Glad to be here today.
Awesome, man. Awesome. Well, let's just kind of get started here. You got a real unique position that you're in. You've lived both sides of this business as a dealer and now as a risk consultant. What made you realize that powersports dealers needed a specialized insurance expert like yourself?
So spending 17 years on the management side and with my family business, insurance was something that was always, no one could ever answer our questions about, whether it was through any of my 20 club participation, any industry consultants, OEMs. Whenever insurance would come up, it just seemed to me like, you would get the name of whoever the Century or Federated rep was from whoever was in your group and then move on. Being from in Louisiana, those weren't necessarily options for us. And as a result, we were kind of in this place where we never really truly had what we thought of as someone that was handling our insurance that understood how our business operated. It was almost exactly 6 years ago, we sold our store in 2019, in October of 2019. I had to figure out what I wanted to do when I grew up and at 37 years old. And so actually a colleague of mine from the dealership, a customer of mine from the dealership, he and I used to race Thruxtons together, called me and said, "Hey, what are you doing?" I said, I don't know. What do you got? And he was like, "Hey, what if you sold insurance?" I was like, "I don't want to be the insurance guy." He's like, No, it's middle market. It's more consultative, dealing with CFOs. And it's not just kind of this commodity based, a transactional insurance. It's more consultative. And so I went and joined a firm with him, a very large firm, one of the top 10 in the country. It was the New Orleans office. That office primarily handled oil and gas and marine. And so I came in with this idea of helping dealers because it's a place where I knew so many people. I could start, calling on people pretty quickly. And really, it was about trying to get people that would believe in what I was doing, having known that just 6 months ago I was selling motorcycles, and I cut my teeth there and really figured it out. The best part was I got my first opportunity. I go to the account management team. And I'm like, "All right, guys, I got an opportunity," and they're like, "We don't know where to go with this. This is we do oil and gas." And I was like, "Okay." Well, then I had to figure out where were the markets, who were the players. I mean, I started from the very bottom of this and worked my way up as far as how each piece of this works. As a result of that, I think it was actually a great kind of baptism by fire. And I made this career shift in the spring of 2020. So COVID had hit. So there was a lot of time, it was this nebulous time of about 2 months where they were like, "Hey, just hang out. We don't really know where things are going to go." So I really started spending time working on, okay, where are dealerships being placed? What parts of the country work better than other parts of the country with different underwriters? Start getting on the phone with underwriters, started calling other brokers that play in this space on the dealership side, primarily on the car side. But what I was able to figure out was that there was nobody in this industry that was marketing directly to power sports dealers, talking directly to power sports dealers from the perspective that I had of saying, "Hey, I was on your side of the desk. I know what you need. I know the questions they're going to ask. I know what changes you need to make within your business to get there." So that was kind of a long answer to your question, but that was the road to how I got into insurance from the dealer.
No, that's perfectly good. You mentioned baptism by fire there. I think a lot of things in power sports start that way. And they know what they're doing,
I think so much of this was just kind of my training there's never a moment in a dealership where you can kind of relax, right? You're constantly, you've got some new challenge every single day when you open the doors to your store. And so I think that it was a really good training to understand that. It was exactly the same way we got into this industry to begin with. My parents, we went to Italy, mom saw Vespas. We came back home. She opened a Vespa dealership. My brother and I never ridden on two wheels in our lives. Learned how to ride Vespas in front of the house. I was in college. My brother was in high school. And then, from there grew to BMW, Triumph, Ducati, Vespa, road racing, Power 50. So I've only ever known how to start from nothing to get to where I was in expertise. And so now it's been fun. I'm getting into my sixth year now into this business. And so it's been rewarding to kind of been able to see the idea, and now it's all playing out.
Yeah. You got a real great timeline here. I did a fair amount of research on you, and the things that you're saying and writing about are particularly interesting. And in one of your articles, you said it feels like insurance is getting harder. It's because it is. Now, maybe we can start on this next part and just kind of like tell me what is actually happening behind the scenes that's making coverage tougher, or, that's making it more expensive for dealerships.
Well, I think that it's the way that these markets have approached power sport dealerships when they enter to be an underwriter. They don't truly understand how the business works. What they're doing is they're taking what they do with car dealers and then just making it smaller and having it apply to power sport dealers. And I think what happens is they come in and they go, oh, wow, this is less of a commodity-based industry. This is a relationship-based industry, which requires a different type of interaction, right? The car dealership is not throwing poker runs, or maybe the Porsche dealership is doing a drive together, but there's just not a whole lot of times when you're getting people back into the stores for big events, or you have these, where you've got a test drive exposure that's not in a cage with four wheels, where you put somebody in the passenger seat, right? And so they enter and then don't truly understand it. There's not a whole lot of brokers out there that have been in our shoes that can translate it to them, and they get to a point where the losses outweigh the premium, and they can't raise the premium anymore because they're not competitive in the market, and then they leave. And in my time in insurance, we've had 4 major markets leave. And at this point, really nobody enter in that time as well. And so for me, it's been really about the markets that are still available. The bigger players, I really try and keep a relationship with them and even work with them behind the scenes on the risk management side, because they've really been tightening screws on dealership events. They've really been tightening screws recently on test rides. And it's really about having the conversation to say, hey, what is your interpretation of how you think this looks? Let me explain to you what the reality of it is, having been in that role and knowing what the relationships with the OEMs, coming from the European motorcycle side, we knew that test rides were essential for us to survive at least 20 years ago, when these brands were still kind of emerging into bigger players.
Right.
I think that, I see now, it's interesting is when I'm working with dealers, it's about 50-50 split of people that say, hey, I absolutely want test rides, or, if I didn't have them, it wouldn't be the end of the world at this point. Right. And so that's anecdotal, but there is that piece where it may not be the same across the board. Another big thing too is if you were talking motorcycles, then there are the most options for markets. If you start breaking UTVs and ATVs into the mix, the market opportunities shrink. If you start bringing in personal watercraft into a store, the opportunities are almost impossible. And depending on what state you're in, they could be impossible to be able to write everything onto one policy. So what you'd have to do is actually write the marine side of your business one way, the power sports side of your business another way, which is basically you have 2 insurance policies at that point. So there have been lots of, these first couple of years were, first of all, figuring out who the players were and then creating a relationship with the players. Now what we're really trying to do is maintain the business that they have and also grow and find more underwriters to work here. I really consider myself, and I say this all the time when I speak, and I think I've written in my articles, yes, I'm a producer, and yes, I have clients. However, I do believe that I kind of act as an ambassador for the industry and an advocate for the industry as it relates to the insurance markets, because it's impossible for me to write 10,000 stores, right? and I can't be, and there's some places of the country that have got specific insurance appointments that we can't get to because of where they are geographically located. So I have conversations every week with people where I say, hey, I can help you, or hey, I don't think I can help you this year, but let's stay in touch. Just because I know based on what part of the country you're in, where you're currently placed, what that kind of looks like in this space. So like I said, I always approach this from a perspective of being the advocate for the industry, not just worried about my clients or the potential of new business. I'm really looking at this to try and help the industry, because with the amount of underwriters that we've lost, what really worries me is that if it continues to shrink, it's going to make it much harder when it's already hard or impossible to do business in some states if that continues. And that doesn't do well for any of us, right?
Yeah. Well, let's double click on that. I mean, you've seen multiple major carriers exit the market, K&K, Harco, and others. I mean, is it because of what dealers are wanting to do with test rides or events or UTVs and ATVs? I mean, who's left, and what kind of options do dealers have now?
Well, so two parts of that question. Why are they leaving? They're leaving because their losses are outweighing what they're bringing in for revenue, right? So once it goes upside down, then they go, you know what, we're out of this space. How do they fix that? I think that you've really got to look at the insurance process not just as it's not a commodity business. It's not a commodity business at this scale when you're dealing with such a high touch business. And what I mean by commodity business, listen, if you had a flower shop in a town, you can go on hiscox.com or even Progressive for one of these companies and get a small GL policy and whatever you need. Businesses, powersports businesses, dealerships require a lot more understanding and controls, and specifically risk controls. So as a broker, we're not just selling you an expensive PDF that you get mad at every time you have to renew it. And then you talk to your broker when you renew, and you talk to your broker when you have a claim. What you're really buying here is a risk management strategy, and your broker should be part of that risk management strategy. And so, having it's no different, honestly, than the sales process. Like, good sales process creates great results to the bottom line. A good risk management process creates better results or more opportunities for markets to the bottom line of what your premium is going to cost you and what exposures look like. And that, it's interesting because in a lot of those cross over, right? Having a good test ride policy is probably a pretty good thing to have, even on the sales side, right? Because you don't want to have people getting hurt and stuff getting broken, even if insurance wasn't part of this. F&I office, making sure you're in compliance with everything that's going on with current compliance laws, but because that can open you up to an errors and omissions exposure. But also, the number one claim I've seen in the 6 years I've been here has been false pretense. A false pretense is somebody coming with a fake ID and buying a vehicle from you and financing it. And then the bank calls you 6 months later when no one's made a payment, and you owe the money for that. And so I think that just like you work hard, top operating stores work hard to have a great process in all their departments. One of those departments should also be risk management, because whether it's the mechanic or the salesperson or the F&I office or the parts guy or any of those things require, as you're building those processes, build in the risk management processes in there that will also, make sure that you're insurable. So that's that first part of that question. I think the second part was about availability of markets and what's happening there. So that's, once these markets hit a certain point where they go, hey, we can't handle this anymore, they leave, right? So what else, the other part of this needs to happen is that someone's got to be advocating for the industry on the other end to make sure that we're attracting new places. And the good news is that I've seen more opportunities for new markets emerging now than I have in the last 5 years. I've actually had some conversations of places that may be coming online this year, which would be tremendously helpful. But, based off of how many have left in the last 5 years, there's probably a good chance one of the ones that's currently running right now will go away. And actually, we've seen that E. Hall, which is an insurance MGA, just is putting a new underwriter on their program. So they're not writing policies in the fourth quarter. They're not writing new policies, and they're not renewing existing policies until the new underwriters are underway. It's this, my role is, yes, finding new business, writing new business, maintaining the business that we have, make sure we have good client relations, but it's also making sure we're marketing ourselves as an industry to the underwriters to say, hey, this is something you may want to take a look at. And if the dealerships can fall within these parameters, they could be a good risk for you.
You mentioned that earlier, your number one claim is a false pretense. So that's somebody committing fraud and not making payments, and the dealer's on the hook. The F&I office compliance. Again, you mentioned test rides, events, different for UTV, ATV, motorcycle. I mean, it seems like this is mostly consumer facing type insurance that you're mostly working on. How does this cross over with like workers' comp, or say a vehicle falls off the back of a lift in the shop, or, somebody gets hurt or whatever inside the dealership, and an employee caused type insurance situation. How does that work into what you do?
So as I'm considered a property and casualty insurance broker. So we would sell, your general liability, your garage liability, your auto, and those are kind of all packaged into the same. But also in there is your workers' comp, which is, insuring your employees against any sort of injury. The great thing about workers' comp is probably the heaviest regulated of all the coverages. Rates have been really good on it. And it's pretty, like, they don't, when you have a workers' comp claim, you work directly with the underwriter. It doesn't go through the brokerage to do that. That whole process has really been streamlined. In the 80s and 90s, workers' comp had gotten completely out of control. And it went through a big regulation overhaul in the last 20, 30 years. And as a result of that, it's become less of an issue, specifically as it drives premium, but also as it relates to managing and getting people back to work. And so there are a couple different ways to purchase that, because I would say probably a third of my clients write their workers' comp with me, because a lot of them will buy their workers' comp through their payroll companies. And if you're a smaller store, under $5-7 million, it's probably the same cost or so to buy the workers' comp through your payroll company as it is to buy it from me. And then it's all included in the billing of the payroll. Now, as you get bigger, maybe you have multiple locations, it does make more sense to go through a P&C broker to find that workers' comp, because the admin fees don't really start paying off at that point as the stores get bigger. So that's as it relates to employees themselves being insured. Now, you mentioned a vehicle falling off of a lift. If it's a customer vehicle, that's your garage keepers coverage. So those are the vehicles that are in your care, custody, and control. So think of it kind of like as a auto policy that you're responsible for while you're carrying those vehicles. So that would be that piece of that. Now, there's also on the employer side, there's employment practice liability, which would protect you against wrongful termination lawsuits or sexual harassment. And typically there's a pretty good number of dealers that don't have that coverage, but when I review or maybe had bought it in one of these garage packages, and the coverage you're getting for the amount of money you're paying, it's like, we could definitely find a better option for you there. And that's where I think a lot of the expertise of where the time I've been able to spend here and understanding these stores is that you can't just sell the garage package as it comes, because they try to package everything into the policy to make it easier for you as a broker to go, oh, I got everything here, it's all good to go. But there are certain coverages like employment practice liability and cyber specifically that are usually very expensive for how much coverage you get, when I can go find a policy somewhere else and get you better coverage, usually for a lower premium as well.
Yeah. You've said previously, kind of going into what dealers can control, is you've said waiting until renewal, or worse, until something goes wrong, isn't a strategy. I mean, what do you see are the most common mistakes that dealers are making when it comes to managing their insurance, or just trying to pick the right type of coverage for their store?
Well, I think it begins, and so there is, and I probably have booze in the audience for this, if this were live right now. If you're only making an insurance decision based off of your premium, you're not doing it correctly, because premium is created by whatever exposures are being insured. So just because the premium is lower doesn't mean the coverage is the same, or sometimes the premium is higher than the coverage isn't as good as a lower premium, right? And so I think it starts, number one, with having a broker that understands the business, and will go to bat for you. Someone that's gonna you can have these conversations with. I'll also tell you this too, is that just because you're an insurance broker, a commercial insurance broker, it does not mean that you have access to all the dealership markets that are available. So in the insurance market world, there are specific appointments you can get to write with that underwriter. So because I spend time in this space, I've got all the appointments that are available to me based off of geolocation and what I do for dealerships, because this is what I write. So if you say you have a customer that's an insurance broker, commercial insurance broker, who's never written a dealership before, and you live in a difficult state to insure like Florida, he may not have any options for you, but he may not know that until he starts working on it. And then you're 30 days down the road and he's like, I have nowhere to go for you. Or the one place that was available that I can access as a general broker is 3 times the price of what you were doing before. Right. And so I think that relationship and giving yourself enough time. If we're talking from the front end, if you're watching this today and you're going, okay, I renew in July, how should I start this process? I would say probably around, maybe you can start having the preliminary conversations now, but by the first of the year, by the end of the first quarter, you should have interview who you want to interview, have those conversations and have a plan in place by the end of the first quarter, because you're going to want to have those applications completed and into the market no later than May 1st, because no one wants to have a renewal the day before the renewal, right? And so it's going to take time once we get it into the marketplace. And so I think it's about really starting from the beginning, making sure you have someone that understands your business. And then it's someone that can ask the questions of, hey, what are these processes? And a lot of what's interesting is that a lot of the application process uncovers a lot of this to begin with. So we can kind of going through the application process kind of gets us to a base level. And I'll tell you, most dealers have great processes, at least the ones that I'm working with have great processes. Really, it's just about making sure I understand the narrative, because so much of what we do, we're the advocate. The broker is the advocate for the customer in the marketplace, right? So the more information that I have to go and sell you to the market, the better off you are. And so that's where we can, and the biggest thing I'm running into right now is how are you managing your events? Because your events are not covered under your insurance policy. So if you're having a 4th of July barbecue with a stage and fireworks and a stunt show, that's not covered under your garage policy. You need to get an event policy. And kind of having those questions beforehand, because the underwriter is also going to go to your website and go, hey, what is this? What is this? What is this? Explain this to me. Explain this to me. And so understanding, like I said, all of those different aspects of how the dealership works so that we can go out to the market. And then on the other side of this too is making sure you've got a broker that actually has a claims department. There are some brokerages that don't handle any sort of claims. And honestly, from the brokerage perspective, it's really just gathering all the information, getting the claims process started for you. And then, you're working directly with the adjuster, but we're just in the background going, hey, just checking in. Is everything good with the adjuster and making sure things get over the finish line? There are some brokerages, pretty big brokerages that work with dealerships that don't have a claims department. So they just say, hey,
interesting,
look at the back page of your policy. And that's another piece of this too, is that you may have 4 or 5 different policies, even with the same underwriter. So you may have 4 or 5 different policy numbers and coverages one coverage may be on one policy and one coverage may be on another policy. And there may be 2 separate adjusters for those policies. And so if you don't understand that as a client, it definitely makes it more difficult, right? So it's about working that piece of it too.
Yeah, that's interesting. Okay. When you talk a lot about treating insurance like an operational priority, what does that look like inside the dealership? I mean, you were talking about how the timeline was with dealers reviewing the policies, but who else should be involved in that process outside of just the operator owner?
Well, I think the conversation with the broker should probably be between the dealer principal or general manager, and if there's a CFO or controller in there, because that's where it all starts. I wouldn't really say that the broker would be someone that would be very hands-on in the risk management process with any of the staff. I think it's about kind of managing from the top, saying, hey, these are the processes you should have in place, and then they can make sure those things are happening. I think where the interaction with the broker comes in with employees, maybe outside of general management, would be when claims happen. I have a couple of dealer groups where you've got a dealer principal in one state, and maybe 4 or 5 of the locations are not in his same state. So he's got people on the ground there that if something were to happen, he's not there. And so it's about having him involved, the dealer principal involved, but also making sure that the general manager and then whoever else was dealing on the individual side. But I do think that, making sure, I think that the best comparison is really just kind of like compliance in a finance office. Let's talk specifically around test drives, making sure the process happens the exact same way every time. Make sure that, the waivers are signed. People are making sure they're riding with the right gear, that whatever pre-ride conversation has to happen. Some underwriters want to make sure an employee goes out with them. Some underwriters want you to have a specific riding route, making sure all that stuff is handled. The same to be said in the service office. Before you have a tech take a vehicle out, making sure that whatever that process is, he's wearing correct riding gear, not smoking a cigarette while he's doing it, making sure he's following traffic laws, all those things that you would do for any other department, making sure you make that the culture of your business in day-to-day operations.
Absolutely. I mean, having worked with one of the larger companies in the space, I mean, yeah, we had to wear helmets when we moved vehicle 10 feet, to move it outside. And, early on, a lot of these newer guys, they didn't always understand, well, why do I got to do that? I'm just moving it. I'm not going out riding. Well, it's, for insurance purposes or this or that, right? So yeah, the culture is going to be huge for how you manage that process that's defined by your insurance so that you can keep it and, be able to use it when the time comes for something really important, not just a guy that forgot his helmet, right? Let's talk about transparency, right? So you've got some key players, you got the timeline. I mean, what does sharing the more data and detail with your broker actually get you when we're talking about the best coverage possible and the rates?
Well, transparency is 100% key here. I mean, you can't go into this relationship and get the best possible result if you're not completely transparent with your broker. Your broker's not completely transparent with you. And I'll start that by saying the way this industry works, the way the insurance industry works is that, so I'm an insurance broker, so I have access to infinite amount of markets for multiple different industries and what we can do. The idea of a broker is that you hire the broker to go and do the work for you. And then there are two other, then there are direct writers. Federated is a direct writer, Zurich's a direct writer. So that Zurich or Federated representative is not a broker, is a producer, but they don't broker your policy. They only sell their product. If you go into Federated or Zurich, they're not shopping you. They're just giving you their product. Absolutely nothing wrong with that. In fact, in some parts of the country, I mean, Zurich, where Zurich is very hard to beat. They do a great job. They kind of invented this whole market for dealership insurance. Federated, depending on what state you're in, it may be the only coverage you can get. But just know that, there's a difference between the Federateds and the Zurichs, and formerly Century. They're not doing this anymore in the power sports world. And then what we do is, as a broker, we go to markets. What you don't want to do is to put two brokers into the market at the same time. And if you do put two brokers in the market at the same time, make sure there's a strategy on where they're going. Because what will happen, me as a broker and the other guy as a broker can't approach the same markets. So if I go to a market and make a submission, that other broker is then blocked out of that market as a result of that. So
Interesting.
If it's, and we don't always write every line of business with the same company, because, we create kind of, in a lot of situations, especially if you're coastal or you're in an area that has high wildfire exposure, any kind of weather exposure where we have to remove the property and put it somewhere else.
Yep.
There's a lot of moving things around and making sure, this underwriter may be perfect for the garage package, but this underwriter may be perfect for the dealer inventory coverage. But if you've got two brokers in the marketplace, one of us may have access there to one and one of us may have access to the other, but we can't present them together because we're both there. So it really doesn't behoove you, especially coming from a dealership side where you're always competing with the dealer down the street, the dealer on the internet. It doesn't work that way in insurance. What you really want to do is first hire the broker you think is going to do the best job for you, and then let them run with it. Because if you put more than one broker in there, it can muddy the water for you and end up not netting a great result at the end. Specifically, and what you don't want to do is waste a whole lot of time here either, because this is we ask 1,001 questions when we have a new client, right? We try and get as much information up front as we can out of the current policies and all that, but there's going to be a lot of time spent on this by you and the broker. So fail fast. If it's a situation where they're not going to be able to turn it around for you. And myself as a broker, and I'll speak for myself, is that if there's a situation where you're you're in Ohio, you're already with auto owners, you're probably in the right spot. Are you happy with your broker? I always ask that question. Are you happy with your broker? If you are, stay there. If you have any questions, I'm always here as a resource. If you're not happy with your broker, there are ways for us to take over management of the account so that your relationship with the insurance carrier, the service side of this is better. Like I said, you're not just paying for expensive PDFs, making us part of your risk control process. But yeah, through the transparency, I've run into this every now and then too. I'll have an initial conversation with a client prospect that calls me. I'll say, send over your policies. I'll get the policies back, and addresses and premiums and all these other pieces are redacted from the document because they don't want me to see it. In order to be successful, we have to know what you're paying right now. If you take the premiums out of this, it's like playing a game with no score. If you take the premiums out, I have no way of knowing if you're paying what you should be paying or you're paying less than what you should be paying, or coverages aren't correct. The premium tells me it's such a story because the exposure side, those two go together. because whatever you're insuring versus what it costs is really important. So it's not, this isn't a situation like at a dealership where if someone wants to buy that GS and you go, I'll buy it for, you offer me 16, I'll take it for 15. You go back to the sales manager's desk and you're going to knock it down. That's not how insurance works. Right. There's an exposure. So there's $1 million of coverage. The rate is X, and this is what the premium is. So it's not like there's no negotiating room with the underwriters. So it's sometimes just having to like rewire people's minds to this because they're so used to being in that consumer space where that's how it works. Now, this also goes back to making sure you've got someone that has access to the markets that you can be successful with and has a plan to get you there. Because as the broker, we're the ones that are going to multiple places and then coming back to you with what the best option is.
Absolutely. So definitely bring your existing premium to the table, have all your paperwork there. But like, what other types of key pieces of info should a dealer bring when they're talking to a guy like you about their next brokerage to service them forward?
Profit and loss statements, balance sheets. And actually when we really get into the weeds sometimes, like specifically when it comes to dealer open lot, and dealer open lot is your inventory coverage. A lot of times when I'm reviewing policies, I'll see a number that's listed on the limit for the dealer inventory. And then I'll see the policy. I'm sorry. Then I'll look at the balance sheet and look at the general ledger and look and see what the inventory is, and the numbers don't always match because you should be in. Well, and some dealers will say, "Look, I own this inventory. I'm going to self-insure that inventory." But if you're floor planned, obviously you're contractually required to cover your inventory. So, and some people don't even think about it, right? They go, "Okay, Wells Fargo wants me to have $1.5 million of coverage. I'm going to get $1.5 million of coverage." When you actually have $3 million of inventory, and you may own $1.5 million of inventory that has no coverage. So, so kind of that getting financially undressed a little bit, so we can take a look at that. So, understanding current policies, your financials, and I've seen so many of these right now. I could see look at revenue numbers, look at employee count, look at the state you're in, and go, okay, you're probably paying X. And that's kind of, we could start there. But other than that, once we start peeling stuff back, then it gets into employee schedules and any sort of vehicles that you may own. I mean, the big pieces of understanding are going to be your current policies with your current premiums, your current financials, and then also understanding your loss runs too, your loss history. Because, if you're calling me because you're being dropped by your current insurer because you've had too many losses, there may not be a whole lot of places for me to help you with.
Yeah, that's not a good scenario to be in.
But also understanding too, having the conversation with the client to go through the losses and go, hey, this is a big one. Explain this one to me. Because like I said, part of this is the storytelling. And then, because let's just say you had a claim 3 years ago that was egregious, and you fired that salesperson, that manager as a result of that, and you changed your process. That needs to be part of the submission, because you go, hey, listen, yes, this happened. This is the changes they made. They haven't had an issue since.
That's interesting. I've seen you at the Dealer Connect the last 2 years now. You obviously get a lot of people that come up to your booth. They ask you kind of what you do, how you help them, right? And you said it earlier, hey, if you're good with your current brokerage or your current insurance company, use me as a resource, as an advocate for you. And if that time will come, we'll happily help you out. But I mean, just in a nutshell, what is like a dealer looking for? What separates a good broker from one that just sells policy from one that's like an advocate for the dealership and the industry itself? What are those key things that a dealer should be looking for?
I think one big key thing is communication. I think communication is absolutely key. And it's been interesting because since my current brokerage, I've been here for 2.5 years, and I was recruited here to create this vertical for powersports within our company, right? So it started with just me, and then we had 2 account managers, and now I've got Nick down in our Arizona office that works on our smaller dealerships. For me, it's always been communication. As we've grown, it's like that culture of communication, so that we keep that kind of brand understanding within our agency. But that's really key. I think it's also really key to have someone that you feel like you could ask questions to. That's not, don't approach this from a relationship of, this is just the sales guy that's selling me the piece of paper. You're paying that premium, use that premium. Call your broker, ask them questions. Look, if you're looking at moving locations, if you're looking at adding another OEM, any sort of changes, use your broker like you would use your CPA or your attorney. And the cool thing about that is you've already kind of prepaid your fees because we don't bill by the hour. We get a percentage of the premium, right? And there's a tremendous amount of free work that goes on our part before we even get you as a client. I spent a lot of free time reviewing policies and going through those things just to kind of give clients peace of mind. I think that's a lot of this too. That's why I always tell people, reach out to me. Let me take a look at what you got. Even if I can't help you, let's have a conversation, because sometimes it's just giving a client peace of mind. I just talked to a dealership that was up in the Kentucky, Ohio area. And, he's like, man, I just feel like I'm paying so much. I was like, listen, Mr. Client, like I can tell you not only for your revenue size and what you're paying and where and who's underwriting you, you're in the right spot. Like, so if all this call does is give you a little bit of peace of mind to know that, then that seems like a win for me too. But also, as much as things change, I might have a market for him next year that he didn't have last year, right? With all of this. But yeah, I think the biggest thing is what you should be looking for is a partner that works within your business, just like a business partner that within your business that you can lean on when you have a question or a concern, or maybe to make an adjustment when it comes to risk management and insurance.
That's great. That's great. Let's circle back to what we were talking a little bit before about some of the major claim issues, right? You've talked about the false pretense coverage. That's the risk of the fraudulent sales or more financing deals. Can you kind of help explain more about what that is? Almost to the level of like, hey, we've seen this so much. Is it preventable? Are there steps the dealer can take so they don't have to file these types of claims? I mean, when they're doing the paperwork in the F&I office, I mean, how does that actually look from a preventative measure?
There are customer verification systems. I know 700 Credit offers one. I know a couple of these F&I compliance companies where you can there are ways where you can confirm the identity is the person that's in front of you. And in the case, I had a big one that I had one store that turned into like 7 different claims because it happened once and happened again. He kept coming back and buying bikes. And then, and over a certain amount of time, and you don't find out that that's fraudulent for maybe 3 or 4, 5, 6 months until the bank goes, hey, nobody's made a payment on this. So the biggest thing, I mean, the technology's there. And look, there's always ways that maybe it fails, but having a way for you to verify identity of someone in your finance office is really, I think, key for great risk management. I also think that it could become a requirement for underwriting pretty soon. I do think that it has slowed down a little bit. It was really prevalent about 2 or 3 years ago. I haven't seen it as much recently, but it has been the number one issue I've seen outside of traditional, smash and grabs or weather-related issues for property in certain places. It was a real kind of eye-opener when I started doing this. And man, we have another one of these? Like, what's going on? And then doing the research to say, hey, where can you go to prevent this from happening? And like I said, companies like 700 Credit that offer the verification of ID are really important.
Yeah, they do. Bob did a really great presentation on just how nasty it is and how these criminals essentially are really skirting the system and being very, very smart about it. And yeah, definitely during the COVID era, whatever, quote unquote, where a lot of things were digitized, right? It was maybe a little bit easier to kind of slip these things through because you, in some cases, didn't even have to go to the dealership until you're signing the paper and, picking up your ride. Yeah.
Right.
What are the other things? Go ahead.
No, that's fine. Maybe you can go.
What are the other things that you called out earlier, and you've written about it before, was the employment practices liability, the wrongful termination, the harassment, discrimination. You mentioned that sometimes that coverage is missing. I mean, what's at stake when you don't have a policy in place to handle that stuff?
Well, look, I always believe that the great thing about this industry, the people that are in it, right? And specifically the dealer principals that are in it, that have made the investment and have the passion to do this, as it's a very high touch industry as far as, it's just a lot of interaction going on between employees, between customers, between vendors. It's similar to like the hospitality industry, right? It's kind of passion-based and fun, exciting. And so you really want to make sure that you're covered no matter how great your controls are. And especially if you're more than one location where maybe you as the principal can't be in everywhere at all times. I do think that the EPL policy is essential to making sure you're covered if anything were to happen as it relates to sexual harassment, as it relates to wrongful termination. Just like everything else, having good policies for all of this so that you're documenting it correctly and make sure you've got all your paperwork together on that. These are, when things do happen, that they typically are, larger than not. And they typically happen maybe 2 to 3 years after your employee has been let go, maybe. And they come up. And so you need to make sure that your policy, if you've never had employment practice liability before, you can't get a retroactive date. So if you buy a policy effective November 1st, you start having coverage November 1st. But if you've had it for a couple of years and maybe you've changed underwriters or changed brokers, you want to make sure that retroactive date is still on there to go back, maybe 5 years or so. Because like I said, it probably hasn't happened in the current policy period. It probably happened in a policy period prior. But it's just really important. And also, a lot of these coverages too will cover third-party vendors. So if there's an issue with the UPS man, right, or something like that, then there's also coverage in that as well. And it's really, in relation to what garage liability coverage costs, it's not that expensive. $1,000 or $3,000 for coverage, unless you're in a state like New York, California, and it could be $5,000 or $6,000.
Yeah. What do you think are some other areas that dealers think they might be covered, but they really aren't, or they just kind of overlooked it? What would surprise a lot of the people listening to this?
I think that cyber coverage, also a pretty inexpensive insurance, primarily set up to help initially to on the cyber liability side. So if you have someone else's data and you're hacked and the data gets leaked, you've got coverage for that, and then you've got the whole process behind it for reputation management and reporting all the things that compliance requires after one of those events happens. Now with dealers having more, most dealers are probably using an electronic DMS system that should have its own policy. And so if the DMS is hacked, it's on the vendor, not necessarily you. You'd be a third party to that. But there are instances of extortion, clicking a link and having your system locked down, and they're requiring a certain amount of Bitcoin. All those policies help you with that. There's also a business interruption limit in there too. So, was it CDK last year that went down and no one could sell anything for a couple months? That business interruption could have kicked in that time too, while you're writing bills on legal pads, right? And so those types of coverages, it's less, when you're an operator, you're thinking about, okay, what are the risks? You're like, okay, somebody's going to run a truck through my window, or a hurricane's going to come and blow my roof away, or, a mechanic goes down. You don't think about things like employment practice liability and things like cyber, right? And so these are relatively inexpensive coverages in comparison to the big numbers of the garage policies. And what I'll also tell people is that if you're buying them through your garage underwriter, you might want to take a look. If you're buying your policy through Federated, or you're buying your policy, if you're still with Century and buying your policy through them, it's probably very expensive for nothing, for basically no coverage. If you're going to spend that money, let's get you a $1 million limit for $1,600, $100,000 limit for $1,600.
Yeah.
Making sure those pieces are there.
You hear about it on the news all the time. Home Depot and Target, right? They're getting hacked and customers' information are being released. You may not be a Target or a Home Depot, but you are still a target in the cyber world, right? So definitely.
Well, how many phishing emails do you get every day? Or how many phishing text messages do you get?
Tons.
At this point, right?
Yeah.
And they keep getting, I'm 43 now, and I'm like, there are a couple of them where I was like, oh man, it almost got me here this time, right? Like, so they're getting better and better at this. And so I think it's something that, and look, they're going after all the big companies. It's much easier to go after smaller companies, or like municipalities have been a big problem for cyber recently. I'm in New Orleans. The city of New Orleans was hacked 4 years ago, and I think that they still are having trouble with records and record, from that.
Yeah. That Ethiopian prince still needs us to help you out.
He's so lonely. He has all this money. Nobody's replying to it.
Nobody's helping him. Yeah, he needs your help. All right. So you talked earlier about documentation, right? Audit internal processes and procedures, especially for the test drives, for the events. Can you give us a couple of good examples of best practice documentation that would help keep the coverage intact?
I know I've said demos a lot. I think a great demo waiver is something that needs to be in place. Now, there are arguments for and against waiver, not necessarily against waivers, but the validity of waivers, and that could, that will all come up in whatever happens in court. The reality is that it's at the very least, it's an acknowledgement for the customer to go, hey, if I wreck this thing, I'm responsible for it, and I hurt myself, I'm responsible for myself. It's mental on that side, but also the underwriters are going to require it. And it does kind of set that barrier right there, right? Making sure if you are doing events at your store, if you're dealing with anyone outside of your business, whether it be, let's say maybe you have a bodywork person that does your bodywork as a vendor, or you've got a trash hauler, or you're having an event at your store and you're going to have a food truck in the parking lot, or any of these outside vendors that are not within your control as an operation, make sure you're getting certificates of insurance from them, because if something does go awry, you want to make sure that they are insured. I think that it's really important too to make sure that you are reviewing your exposures with your broker when you renew, whether that's a renewal, a meeting that happens prior to renewal, before you go to market, before the broker goes to market, or at the point when they present to you your renewal quote. Because a couple things here, property values over the last 6 years have really skyrocketed with the cost of reconstruction costs, right? So if you own the building that you're in and you have a replacement cost value on your policy, and your building burns down, you're still using 2021 numbers on there, you could be subject to a co-insurance that's going to significantly reduce what you're going to get paid out if you're not insured within 80% of the actual value of the building. So taking a look at your exposures. It also, some underwriters are really strict on audits. And so if your inventory levels have gone up or your revenues have gone up, you may be subject to more premium. And it's better to know that up front than it is to know on the back end, to go, hey, wait, you grew by 20% this year, or you shrank by 20% this year, because premium is going to be based off of things like revenue and employee count and property values and inventory values, making sure those numbers are correct, because you don't want to overpay and you don't want to underpay, because you're probably going to be subject to an audit, which is going to make you pay more and could affect cash, because this is a seasonal business for a lot of people, and so cash flow is really important.
As Mike Murray would say, it's a solar powered industry. Yeah. So let's talk about looking ahead. So for a dealer that is renewing in the next 90 days, what should they be doing right now to prepare? And before they make that first phone call, what should they have ready?
I think if you're within your next 90 days, hopefully by this point, you've at least heard from your broker since you renewed last year. And hopefully at this point, they're asking you for your updated financials and maybe updated employee list, or at least have said, hey, this is coming down the pipeline. I think that, if you are within 90 days, this is a good time. This is probably in that really sweet spot for about another 15 days if you wanted to engage someone else to have a conversation, because like I talked about earlier, there's a tremendous amount of information gathering that happens in this phase. And so if it is a situation where you want to move forward with this new person, you want to make sure they have everything they need in time to get to the market. Like I said, I aim for 60 days before renewal to be in the market. It always ends up happening. It's like 45 days just because of lost runs, or there's just so many moving pieces of this that are required for a full submission. So the further you can get ahead of this, I would say 90 days is probably a time when, if you haven't started making the move to have that conversation, do it within the next 15 days.
Okay. And how do you see this market evolving in the next couple of years? Are we headed towards some stabilization, or do you think there will be even more carriers that pull back?
Knock on wood, 2025 has not been a year where we've completely lost someone. Century had already pulled out of the market this year, and then before this year they told Harley Davidson dealers they weren't going to renew them. But it's been a little bit more steady, I guess, than what I've seen in years past. And I've had conversations with markets that are interesting in entering. And I don't know if that's just because of what we have done. We've made a very concerted effort as an agency to really kind of brand ourselves as the expert in the space, and talk. Maybe that work is also working when it comes to to the brokerages, to the underwriters as well. So, I have had some conversations recently about some new players that may be coming into the space. So there is a little bit of hope there. Another piece is that we haven't had a hurricane, knock on wood. I mean, we have another month left hit the continental U.S. this year. And after the wildfires earlier this year, it would be nice to kind of not have another huge property loss, because those international catastrophic events affect everyone's property rates, right? And so the lower of those we can have, the better, because that'll help on all fronts. But really, I mean, outside of that, having more markets will create more competition, and we need more competition right now, because, it's In some parts of the country, it really is getting to be very difficult for these dealers to be able to pay their premiums and still make money in their business. And that's what keeps me up.
Well, I mean, if a dealer wanted to audit what they've got going on right now, how should they start? Where should they start? I mean, what's the one step that they're not doing right now to make sure that they're not exposed?
I think the best thing is to take a look at what you've got. Look at your declaration pages. Look at what your building limit is right now in your building and go, hey, divide that by your square footage and say, hey, can I rebuild this building right now for that amount of money? If not, you may want to, now that could net higher premium, but what you don't want to do either is to have your building burn down and then you can't afford to rebuild either. So at least do the due diligence to see what that looks like. Take a look at your balance sheet. Take a look at your inventory. Inventory levels were high before COVID. They were low during COVID, and they're going back up again. Make sure your inventory levels are correct. Not only on your vehicle inventory, make sure your business personal property limit, which is what's going to cover your inventory for parts, accessories, apparel, furniture, fixtures, and equipment. All the things that if you turn the building upside down and shook it would fall down. Those are the outside of vehicle inventory. Make sure those business personal property limits are correct. Take a look at your processes. Take a look at what you're doing. Just real quickly, when you're having events, are you aware that you're not covered under the insurance? You can make the decision on if you want to buy an event policy. Now it's up to you. But if you ever considered that, group rides really can't be covered by anybody. So just think of these things, and the reality is you've probably been doing it for 30 years and haven't had any issues, and you can figure out what those things look like. But really, if you're doing a self audit, go to your declaration pages of your policies and take a look at what your limits look like. And if you have a question after that, give me a call because I have no problem with reviewing that with you.
For sure. On that note, I mean, you talk to a lot of dealers, right? You're at Dealer Connect, you're at AIM Expo, you're at Powersports Business. I mean, you're at all these events and you're obviously talking to dealers on the phone and through Zoom calls every day. I mean, what types of big questions are dealers asking right now? What's keeping them up at night when they come to you with an insurance and risk question?
Why are my premiums so high?
So cost, right? I
mean, the cost always starts the conversation, and that's obviously it's a big piece of your bottom line, right? And so for me, it's about and I always come in and say cost is important, but also let's look at exposure and cost, and then let's figure out what your risk tolerance is, because if taking a higher deductible is fine with you, that might save you X here. Or if, not buying event policies when you have events because you're going to self-insure those things, those are fine too. Like whatever, trying to find out what the client's risk tolerance is as well. But if you're asking me what keeps people up at night, it's mostly what they're paying for their insurance. And honestly, there have been so many instances recently I've had where people were just looking at that back page of the proposal. It's a great place to start to go, okay, what does it look like this year? But you've got to go back through those other 40 pages and look at those numbers, because that end number doesn't mean anything if you don't have the coverage for what you have and you're not aware of it.
Well, there it is, folks. I mean, make sure your coverages are right. And if you're paying a little bit too much, I'm sure it's for good reason. And if you don't think it is, Zach can help you out. So Zach, thanks for joining me. You've made something that's not all that sexy in our industry, but most people still talk about it. Insurance, right? You actually made it make sense. So thank you for that. If you are listening to this and thinking, hey, we should probably look at our coverage before renewal, now's the time. Don't wait. You heard it from Zach. He said, start now and look out for that future within 60, 90 days and start talking to your brokerage, get all your stuff in line. Zach, how can people contact you? Where can they see more of you?
They can find me on LinkedIn, Zachary Materne. My phone number 504-236-0120 or zachary.materne@sellbrokerage.com.
Outstanding. Well, as always, thank you for listening to the Dealership Fixit Podcast. Hope this Dealership Fixit Podcast has helped you. And make sure to share it with another owner, operator, GM if you found some good things out of this. And we'll see you next time. Thanks, Zach.
Thanks.
Still guessing what to pay on a used bike? Still holding aged units that just won't move? It's time for a real system. Moto Hunt's ultimate used inventory playbook shows how the best dealers are finding better inventory, pricing trades right, and turning used bikes faster with fewer mistakes and more margin. It's short, real, and free to download right now. Visit dealers.motohunt.com to grab your copy or check for the link in the notes.